But where do you see things happening now leading up to this election, and what impact could that have for some of our brokers?
Well, I see nothing happening before the election. Hopefully the election will be in May. Well, it won't be any later than May, but I think two things are going to happen after the election, which are going to have positive spins for brokers. One thing is that projects that have been held up until now, until the election, are going to get greenlit, and so there'll be opportunities, there'll be new funding opportunities that arise from that as projects that are held up for now get the go-ahead after the election, obviously, so keep an eye out for those. The other thing is that, you know, the ATO is going to put away the feather, you know, the tickling feather and bring out the baseball bat at some point. You know, I expect maybe 2 or 3 months after the election, and when that happens, you know, brokers will need to apply their expertise again, as you say, with non-banks. The other thing that is going to happen, we're going to get rampant inflation. At the moment, you know, this idea that we've got 3.5% inflation in Australia is a joke. You know, there's an article in the paper the other day that, you know, baked beans and spaghetti are up 10 and 20%. And we all know, you know, we just know when we go to the shops, it ain't 3.5%. You know, how they manufacture those. So then what does that mean? I think that it's going to mean something for interest rates. When interest rates go up, the banks are going to become a lot more cautious. You know, one of the reasons that banks are the way they are now, you know, I know a lot of brokers think that they're not generous, but they are actually nursing clients, and that's because interest rates are so low, and they can afford to hold on to exposures that they otherwise wouldn't hold on to. So when interest rates start going up, you're going to see the banks looking to push exposures off their balance sheets, and I think they're going to get tighter with their lending. And so, you know, we talk about relationships. I think it's important that brokers have good relationships with non-banks. Yeah.
Yes, and, you know, we've seen effectively a sleepy labour market for a few years, but anybody that's been in Sydney just recently has seen train strikes. Yesterday the paramedics were on strike. The labour market is now starting to flex. And that by itself will become inflationary as well.
Yeah, I don't know. I mean, I know that the GDP figures, for example, are telling a story of a labour market that's going to start flexing. And I've seen some flexing. In fact, one organisation that I'm involved with, not my day job, you know, they've just lost a key person because of a pay dispute. But I just don't know how much of all this buoyancy is, as I said before, with COVID and with the government handing out money and with banks, you know, giving moratoriums, what have you. You know, the stats show that balance sheets, small business, and people at home have accumulated a lot of cash. So I just don't know how much of that buoyancy is just the you know, the log that's full of all this cash, and when that runs out, I don't know. So.